Hi, this is Zach Mead from Zach's Traders Cafe with a look at some single stocks on Thursday, the 8th of September. Starting off with CloudTag, and got what looks to be a mid-move consolidation period. The shares have come up a long way in a short space of time, but overall the target here as high as 20 pence, while we hold above the 10-day moving average, currently around 10 pence. That will clearly catch up with the shares over the next few sessions, so the risk-reward there will improve, but 20 pence the target there at a May resistance line projection. On to Dixons Carphone, and here we've got a situation where shares had the what can be described as a typical post-Brexit vote shakeout, slowly recovering now, getting back to normal. Uptrend line there from the end of June, and a rising trend channel you can draw, pointing at the 200-day moving average at 417 as the target. And that target's valid at least while we hold above the 20-day moving average at £3.72, and the floor of that channel, which is just below that. RSI at 61, so still not in the overbought camp at this stage. On to stock which I haven't looked at for quite a while, DFS Furniture. Here, similar breakdown and then recovery to the one that we've seen at Dixons Carphone. Rising trend channel from early July, floor of the channel at the 20-day moving average, and target towards 300 pence over the next 2 to 4 weeks. That's valid while there's no end of day close back below the 20-day moving average at £2.64. Any dips towards that area regarded as a buying opportunity, although today's gap through the 10-day moving average suggests that there won't really be much weakness ahead of a potential 300 pence target for DFS. Going into the FTSE 100, and we've got International Consolidated Airlines. Nice push this week through the 50-day moving average at 397, and while there's no end of day close back below that, we're looking for a decent upside here. Probably at least to retest the old July peak that was towards the £4.40 level, and that could then give way to a best case scenario target at over the next 4 to 6 weeks as high as £4.70 at the top of the June trend channel. Stop loss, as I'm suggesting, really back below the 50-day moving average. Onto Ocado, which had a good run earlier in July and August, sort of had a little bit of a setback today. Could be the reason for this could be a rising wedge formation, which you can draw from the beginning of May, but that doesn't break really until we get back below the 20-day moving average at £2.99. So it might be worth waiting on an end of day close back below that before deciding to embrace the bear argument fully there. But £2.99 looks like a key level there after the August-September bull trap double top. Pearson next, the education group, still suffering in the wake of selling off its FT, the jewel in the crown that it had before. Neckline support broken here, really at the 200-day moving average level. That was at £3.33, and while we're below that, there's a risk of a retest. Of £8.33. While we're below that, there's a risk of a retest of the £7.80 to £8 support area from May and June. Going on to the final stock of this selection, Thomas Cook. Here we've had a nice recovery, actually. A saucer bottom type formation. We broke back above the 50-day moving average in mid-August, and were so strong we haven't needed to test that feature at 64 pence since. In fact, we've been holding above the 10-day moving average at 71.69 pence. So the view here is that at least while there's no end of day close back below the 10-day moving average, we should head up to the 200-day moving average at 88 pence. That also ties in with the top of that gap to the downside from May at 87 pence. So pretty good upside there, likely, or it would appear to be on the cards there at Thomas Cook. That's it from me. More updates at the same time tomorrow.